Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Green on the screen. US and European futures jump after a court rules that many of President Trump's tariffs are illegal. Presidential pushback. The White House says it will appeal the ruling from the US Trade Court, which says that the levies must be dropped within 10 days. Plus, chip giant Nvidia gains after a solid sales forecast. But CEO Jensen Huang tells Bloomberg the competition from China is now quite formidable. A very good morning. Welcome to the programme, everybody. It is Thursday, and it is not a Thursday on which you would want to be bearish. Look at the futures picture this morning, really welcoming this tariff ruling from the US Trade Court. Futures higher on both sides of the Atlantic, and the tariff news kind of dominating, overshadowing the Nvidia news, the sales forecast that we came through with yesterday, even though that did push up shares on Nvidia about 5% in extended trading. Flip the board and you can see this playing out in the cross-asset picture as well. The dollar higher as a result, the Sell America trade unwinding a bit again, and euro dollar taking a hit. 112 is where we trade, oil up, gold down, and the 10-year Treasury yield at 4.5%. But let's get over to Avril Hong now in Singapore. She's got an update on how Asian markets are digesting this tariff news. Avril.
Yeah, Lizzie, for now, green on the screen in the Asia Pacific as well, running on this idea that Trump's tariff and economic agenda has been dealt a body blow. We're seeing among the stocks that are gaining the Apple suppliers. And then, of course, you had Nvidia sort of sprinkling this optimism around that seems to be lifting the tech-heavy gauges. We're seeing the Nvidia suppliers also among those that are clocking gains today. Now, aside from that, we've also been keeping tabs on the US's efforts to restrict technology for China or access to it, and we're hearing how the Trump administration could move to restrict sales of chip design software to China. We have the likes of Morgan Stanley saying that this could benefit the Chinese players because it could spur adoption of local tools. So something to keep an eye on. But flip the board, take a look at what we're seeing in Asia FX. The undercurrent is the dollar story as we see continued gains on the BBDXY. We have the slump in the yen from that tariff ruling, and then the Chinese renminbi also following on from a third day where we saw a weak fix. But focus also on the Korean won, because today the BOK cut rates 25 basis points. This was as expected, but the governor also hinted at larger cuts to come. Perhaps more importantly, he confirmed that there have been currency talks between the US and Asian countries, although we also had the likes of Mizuho saying that this is unlikely to offset the impact from the gains in the dollar. And of course, the dollar story is really against this backdrop of the tariff ruling. Lizzie.
OK, Avril Hong in Singapore, we thank you. Well, let's get into the weeds of that tariff ruling. The US Trade Court ruling that most of Donald Trump's global tariffs are illegal, agreeing that he wrongfully invoked emergency laws to justify the levies. Let's get more from Bloomberg senior editor Bill Ferries. Good morning, Bill. How far-reaching is this order by the Trade Court? How much legal back and forth can we expect in the coming days? Because it's relief in markets right now, but surely there's only going to be more uncertainty from all of the legal back and forth.
Well, I think you nailed it there earlier when you said it is a body blow to President Trump's efforts to impose a lot of these tariffs kind of across the board. What we heard from this trade court and from the plaintiffs who brought it, which included both Democratic-led states, but also a conservative legal center and small business owners, their argument was, listen, fentanyl trafficking might be a problem, trade deficits might be a problem, but they are not a national emergency that allows the administration to slap across-the-board tariffs on countries, including that 10% kind of baseline tariff we've seen. So we know that the Justice Department has already indicated that it plans to file an appeal. That appeal process will play out in the coming days, presumably. This could end up at the Supreme Court. We don't know how that will, eventually end. I think what you can be clear about is we're seeing a positive market reaction today. I think it means there's just going to be a lot of turmoil in the days ahead as this sorts itself out, as the various court levels weigh in, and ultimately as we probably get a Supreme Court decision on whether the president actually has these powers.
Well, Bill, this is perhaps just the recent biggest legal setback for President Trump, but he was also frustrated at what Wall Street's calling the taco trade, the Trump always chickens out trade. Just talk us about his reaction to that.
Yeah, he was asked about this so-called taco trade. I mean, another way we might talk about it is just buy the dip, right? And the idea is that when Trump announces these really elevated tariffs or trade measures against other countries and the market reacts and crashes a bit, that if you go in, you're eventually going to benefit because President Trump almost inevitably lowers the tariff level or reels in some of those things. President Trump very frustrated when he was asked about that taco trade, saying it was a very nasty question, criticizing fake news. But it is something when you look at the most recent 50% tariff threat against the EU that I think took place on Friday. By Monday in the U.S. or Tuesday in the U.S., that was already dialed back or at least postponed. So there is some feeling that that there's a lot of this volatility can be a chance for market actors to jump in on the price swings very quickly.
OK, Bloomberg's Bill Ferries, we thank you. And I want to stay on this market reaction because US equity futures have really jumped on this ruling. And we can get more now with Bloomberg MLive strategist Mary Nicola. Mary, we've got a load of US eco data coming out later. But I wonder, is it even going to move the needle for markets when potentially this court ruling has changed the economic picture for the US completely in the past few hours?
Yeah, a lot of that data is going to be seen as backward looking because as of now, it looks like the trajectory of the U.S. looks a lot better, especially versus when we came in this morning. And of course, what we're seeing now is the fact that potentially the tariffs are off the table. And if we do see that, then that is a big upside surprise for growth, especially in the United States, which is why we're seeing equities react so positively to the news. But also, there is an element of uncertainty that's likely to linger because as my colleague Bill Ferries just pointed out, is that the legal battles are likely to play out. We're going to see this ongoing tiff between the Trump administration and the courts. And of course, that uncertainty could potentially override the euphoria and the optimism that we're seeing today. And not to mention that, you know, we've seen the Trump administration in the past overlook some court rulings. So this, and if they do that yet again, that could precipitate the Sell America trade with the rule of law coming into question.
So perhaps the market a little overzealous about this ruling, given the possibility of a successful appeal. Meanwhile, of course, Mary, last night we had the Fed minutes, and really their message was that all of this heightened uncertainty justifies their wait-and-see approach. Does it change expectations of when cuts are coming?
I think what will be the really key factor that's going to come through is how inflation is unfolding and how the labor market. So at the end of the day, this is the two main things that the Fed looks at. These are their objectives and their mandates. And so, for example, on Friday, we'll have PCE. I think softening data on inflation is going to spark and get traders excited that maybe if the outlook improves on tariffs, then potentially the Fed might be willing to at least ease a little bit more. So the bets on terms of rate cuts are conservative, and so the bias for it could be skewed against pricing in more cuts. That being said, of course, as the tariffs play out, it really will come down to how the labor market is panning out, because we have seen changes in the federal government and cuts there. And does that really come through in next week's numbers, and how that unfolds? That's where the Fed is really going to start reacting.
OK. Bloomberg MLive strategist Mary Nicola, we thank you for that look ahead. Now, we had expected the Nvidia story to dominate, but of course it's the tariff ruling that has been dominating the narrative in markets this morning. But let's dive into those results from the chip giant. Nvidia shares jumping in the late trade after the company delivered a solid sales forecast, which soothed fears about a China slowdown. The CEO, Jensen Huang, told Bloomberg that AI computing and the market for it is still poised for, quote, exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Well, I'm joined now by Matt Bloxham, our senior tech analyst for Bloomberg Intelligence. And Matt, for anyone who wasn't up late having an Nvidia party, as I know many do, just talk us through the top lines. How did it compare to expectations?
Yeah, so the Q1 results were pretty much where the market expected, so about $44 billion of revenue dollars, and the market was looking for 43.3. Gross margin, another big number that people look at, came in at about 71%, again in line. That's a little bit of a dip from previous trends, and they're aiming to get it back to the kind of mid-70s, and they were confident on the call that they can achieve that. The data center business, which is where all these chips go, was more or less in line with expectations. There were some positive surprises in their networking business, which was kind of related to data centers, and also gaming was very strong. So yeah, I think the kind of Q2 output was also encouraging. About $45 billion of revenue, which is where the market was, but it includes about an $8 billion headwind from this inability to sell into China. And I think that was a bigger number than people thought. So when you kind of do all the kind of reverse calculations, probably the Q1 revenue beat was about implicitly 7%, and Q2 maybe about 10% when you kind of adjust for that.
And how is it that Nvidia is able to weather the China storm so relatively well compared to HP? Because, of course, they came out with results as well, and they weren't so rosy.
Yeah, and I think it's because everything outside of China is just going incredibly well, as we just heard Jensen say there. I mean, some of the stats they talk about on the earnings call are incredible. There's something like 27,000 Nvidia GPUs being installed every single week, and this big growth in inference demand. You're essentially going from training AI models to actually using them. So as more individuals, more companies actually deploy AI into production environments, and they start to use agentic AI, you're starting to see the demand for the actual kind of production capability growing. So yeah, there's just everybody is still massively investing in AI, and given that they are 90% of the AI market, they're the ones that are just pretty much exclusively benefiting from that, and so that's enough to offset that pretty substantial China headwind.
OK, Matt Bloxham, senior tech analyst for Bloomberg Intelligence, and Matt will be back later in the programme for more details of those Nvidia results. Let's take you through what else is on the docket for today. We've got plenty of economic data out of Europe. At 8 a.m. London time, we get Spanish inflation data, the preliminary numbers for May. Also for Italy, and later on at 10 a.m. UK time, at 10 a.m. we get the UK numbers as well. 1 p.m. London time, it's the German May inflation data, again the preliminary numbers, and then at 1:30 p.m. UK time, we get a US data dump, as we were discussing with Mary Nicola. So we have the second reading of US GDP, initial jobless claims, and also the core PCE price index as well. But as we've been discussing, you've got to ask how much these numbers are going to move the needle for markets when potentially the trade court has just ripped up the trade picture completely. But coming up on Daybreak Europe, we're going to check in on oil as OPEC Plus ratifies its quota plans for this year and for 2026. That's coming up on the programme. Plus, later on, we're going to check in on how markets are faring with Benedicte Lowe, equity and derivative strategist at BNP Paribas Markets 360. Those conversations coming up. This is Bloomberg.
The fundamental is still strong. If you look at the first quarter, the growth compared to the first quarter of 2024 is 1.7 million barrels per day, which is a strong growth that we have seen. The tariffs had some impact in global economy and sentiment, but still the fundamentals are strong, and we think that will continue for the foreseeable future. We benefit because we do have spare capacity. So if more barrels come to the market, for every million barrels, that will have a huge impact on our net income.
So that was the Saudi Aramco CEO Amin Nasser speaking exclusively to Bloomberg's Jomana Basecci. And you can catch more of that conversation in a Wall Street Week special on the oil giant, which airs next month. Bit of a preview for you there. But let's stay on the oil story. OPEC Plus has ratified oil production quotas for this year and for next, ahead of their meeting at the weekend, when they're expected to decide whether to go and boost output again in July. Let's bring in an expert on this, Anthony DiPaola, our Middle East energy markets reporter. Morning, Anthony. Good to see you. How much does the tariff ruling change the outlook for oil and the conversations that are going to be happening between the OPEC Plus members at the weekend? You've got Brent up on the news today, but Trump, of course, could appeal. We've got the OPEC decision on the horizon. I'm wondering how long the bullishness can actually last.
Yeah, this court decision about the tariffs is another bit of uncertainty injected into the market. So the Trump administration will appeal. So in terms of that being a bullish factor, yes, that's good news in terms of the oil price going up right now for the moment today, because people are thinking, okay, we can get some more trade moving. This will help the economy. However, we've seen this kind of stop-start go through since the administration took office, and then even more intensify since those Liberation Day tariffs were announced. So I think we're going to continue to see this kind of uncertainty go forward as the legal process continues. So a lot of these initiatives had been thought through ahead of time, but it was clear that some of these Trump administration initiatives were going to be challenged in court. And to some extent, it's also expected that some of those challenges were welcome, so that the administration can then try to impose or underline its executive authority and get some favorable rulings for itself. So we still will have to see how that plays out in the court. So I don't think there's a clear indication that the market is in the clear in terms of that yet. So we'll still see that going on. You heard Amin Nasser in the run-up there talking about the tariffs and how that uncertainty has impacted the oil markets. He's talking about the underlying fundamentals of the market, where we have seen growth continue to rise. And every year that oil demand rises, that's a new record. But demand is growing more slowly than had been previously forecasted. And you also heard Amin Nasser say that they've got 3 million barrels a day of spare capacity there, and that's because OPEC production is getting squeezed out of the market, because there's a lot of other oil that's coming into the market as that demand grows, but grows more slowly than expected.
Well, yeah, I mean, the last OPEC decision to boost supply came as a shock. It was against that tariff backdrop. What do we know about what delegates are thinking in terms of strategy ahead of the Saturday meeting?
Yeah, so the question going into Saturday is, do they keep that the increase in production at that higher level of a little bit over 400,000 barrels a day, or do they go back to that smaller level of just over 100,000 barrels a day, which was planned? So let's remember that we've got the wider OPEC Plus group that has their cuts still in place. Those were ratified at a meeting yesterday. The larger OPEC Plus group said, let's just stay the course with those cuts, and let's talk about the future in terms of how we'll set those up going forward after 2026. Then on Saturday, we've got that core group of 8 countries that took some extra production off the market, and they're the ones that we're really watching to see how quickly they take those barrels off the market. Of course, there are some members looking at the oil price that say, oh, you know, we would like to slow down a little bit. Let's let the market catch its breath. But there is that interest in getting back that market share and bringing those barrels back to the market, and that may prevail on Saturday. In fact, the expectation of the market is that OPEC Plus will go for, again, that larger than expected increase, and that will be several months running there. So we're bringing a lot of oil back into the market. What we're hearing from OPEC Plus, though, is that they're saying that they don't see the inventories building. They don't see the stockpiles building. Amin Nasser alluded to that as well. And that gives OPEC Plus that kind of confidence that they're not overwhelming the market too much yet. But we are hearing from the market that there really is that feeling that the market is good now. Product demand, certainly for some of the lighter products, is good now. But once we get past that summer driving season, then things don't look so good. And we are looking at lower prices kind of towards the end of the year, Lizzie.
OK, Bloomberg's Anthony De Paola out of Dubai. We thank you for a look ahead to that OPEC Plus meeting on Saturday. For now, though, oil prices higher, 1.5% higher on Brent, digesting that tariff ruling. Coming up on the programme, another angle in Trump's international relations, the Trump administration escalating its attack on higher education as it moves to revoke visas for Chinese students. We'll bring you all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:24 a.m. here in London. But let's go to the US now. Secretary of State Marco Rubio says that the US is to begin revoking visas for Chinese students. That includes those with connections to the Chinese government or studying in critical fields. Bloomberg's China correspondent Min Lowe joins us now from Hong Kong with more. Min, this seems like it's going to have massive ramifications for the universities, economically as well. What do you think is going to be the potential impact of this visa ban?
Yes, it's a pretty sweeping ban because it's going to affect students. We're not sure if all students will be affected or just those with some sort of connection with the Chinese Communist Party, which again is a very sort of broad category, and people studying in critical subjects. What exactly does that mean as well? There are over 270,000 Chinese students enrolled in the United States last year, according to U.S. State Department data. They are the second largest foreign student body in the U.S. after India. Many of these students enrolled in subjects like science, tech, engineering, and math. And of course, the question is what is going to happen next as well, whether the federal courts will be able to intervene, because when you look at the Harvard case, the federal court was able to get the university temporary reprieve and to allow them to continue accepting foreign students for now. But how it will play out in the longer run, what that means in the future is still a big question. And it also affects the big education consulting industry in China as well. These are professional organizations that help students to study for the SAT and give them an overview about which schools to apply to. So we spoke to an education consultant earlier, and they were telling us they have to now advise their clients to think about other destinations like the UK or Singapore and Hong Kong. These are other popular destinations for students.
Well, yeah, so that's the educational impact. But how much is it going to rock the relationship between Washington and Beijing? Markets were just celebrating the US-China trade truce. Are we expecting a retaliation from Beijing for this?
Yeah, that's the big question. We haven't gotten any official response yet, but it is very possible that the Chinese government may consider retaliating in the tit-for-tat manner, maybe, putting similar sort of restrictions, visa freeze on U.S. students looking to come to China for exchanges. And yesterday we did have the Chinese Foreign Ministry responding, calling on the U.S. not to disrupt normal educational exchanges and to protect the legitimate rights of these international students. We still don't know what the end goal is, whether this is an end in itself or if the U.S. is intending to use this as just another bargaining chip in the broader negotiations of tariffs with China.
OK, Bloomberg's Min Lowe in Hong Kong. We thank you for the update on that story. Coming up on the programme, futures higher following that court ruling on Trump's tariffs. We'll get into the market impact with Benedicte Lowe, equity and derivative strategist over at BNP Paribas Markets 360. That conversation coming up next as futures point strongly higher. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Green on the screen. US and European futures jump after a court rules that many of President Trump's tariffs are illegal. Presidential pushback. The White House says it will appeal the ruling from the US Trade Court, which gives Trump 10 days to drop the levies. Plus, chip giant Nvidia gains after a solid sales forecast. But CEO Jensen Huang tells Bloomberg that the competition from China is now quite formidable. Well, a very good morning. It's just gone 6:30 a.m. here in London. Welcome to the programme if you're just joining us. And as you can see, futures are up and up in a big way on both sides of the Atlantic. This is thanks to this US trade court ruling blocking Trump's global tariffs, and that excitement somewhat overshadowing Nvidia's strong sales forecast yesterday, though its shares were up over 5% in extended trading. Flip the board over to the cross-asset picture and you can see the dollar's also stronger on the trade news, the euro taking a hit as a result. So this unwind of the Sell America trade continuing despite the possibility that Trump could appeal successfully this decision. Oil up, gold down, and the 10-year yield up as well. But let's dive into what it really means for the markets. We can get analysis now with Benedicte Lowe, equity and derivative strategist over at BNP Paribas Markets 360. Benedicte, what a morning to have you as we rip up the script on the tariff war. Are the markets kind of overreacting in their enthusiasm this morning as we look at the futures picture?
Yeah, so the market reaction is basically one where they expect better growth prospect out in the U.S., so that kind of tail risk of the U.S. going into recession or stagflationary environment is kind of going away with this. Now, we still need to wait for the appeal, and that can be successful, so there's still some risk around that. But when you look at the case for Europe, I think if we focus back on Europe, we've got better growth prospect, we've got some fiscal stimulus coming out of Germany, we've got the monetary stimulus with the ECB that continues on its path to cut rates. So I think the growth prospect is still there, and there's still some upside, especially for Europe.
I'm just wondering, though, how to gauge the significance of this ruling, right? Is it just a sentiment boost that will last for today, or is it, a watershed moment, a structural pivot? Or can we just not tell until we know the result of the appeal?
I think it's probably too early to tell. I think we're unlikely to see the end of this tariff chapter. Trump is likely to fight for his tariff negotiations. So it's kind of too early to tell. But the direction that we've been taking since the start of April and Liberation Day is one where tariffs are being brought down. Our expectation at BNP is that tariff would be at 10% for Europe. Now we even have the case that possibly tariff will go to zero. So this is kind of reinforcing our bull case for European equities.
But I mean, there's also the case, isn't there, that if you take away this tariff revenue, there's less money to fund Trump's tax cuts. How do you factor in that argument?
Yeah, exactly. So it kind of rebalances, and it puts also the question on trade deficit at the end of the year and the U.S. deficit as a whole. And we've seen the move higher in yields recently with some kind of concerns around the sustainability of the debt in the U.S. So that will for sure kind of reshuffle and it will put pressure on over-package of the U.S. administration.
Yeah. So and does that rising yields backdrop make equities less attractive in general?
Yeah, for the U.S. equities, there's a big question. When you look at valuation, they're quite expensive. And when you look at the return that you would get if you just invest in treasuries, that raises question of whether you want to go into the risk asset, which is the equity market. This is why we think Europe provides a good alternative.
I will come to Europe in just a minute, but I just also want to ask you about this taco narrative, right? Because Trump's really annoyed that there's this belief in the market that Trump always chickens out taco. Do you buy that?
So our thinking going into the tariff situation is that there is a peak of focus around trade and around whatever Trump says, and then the focus of the market will have to shift away. We'll have to shift to fundamentals, to company stories. There was in April over-focus on whatever news was coming out, and I think investors are kind of taking less and less concerns or attention to the news that's being brought. There's a bit of fatigue around the headlines that is back and forth on a daily basis.
Yeah, because, he does something, undoes it, and the market goes even higher than it was before.
Keep us busy.
Exactly. I promised we'd talk about Europe. You mentioned the fiscal commitments, on infrastructure, on defence. Do you actually think that investors believe in those commitments, that they're going to follow through monetarily later on?
Yeah, I think it's the first time in almost 10 years where there's really a growth narrative that is switching onto Europe. There was really that the U.S. growth, U.S. exceptionalism, a story for 10 years. And now we're seeing some relay. We're seeing that with there's alternative elsewhere, that Europe is trying to, stand on its own and have its own growth narrative. We're seeing fiscal support, monetary support. So this is really a point in history where we want to push the European trade.
And where are the opportunities then?
So, looking at banks is one of our key sectors. We've we've got the fiscal stimulus coming out of Germany will mean more loans, and that will be good for banks. The earnings have been good, but they should continue to be good. And if you've got the higher yield in the US that supports yields also in Europe, that should also be good for the business of banks.
And where else, apart from Europe, are you looking for opportunity? Because it sounds like you're saying diversify anywhere but the US.
Yeah, so I mean, our strategists in Asia, they like the HSI tech. This is kind of their favorite. So there's pockets somewhere, I mean, everywhere to invest. We're saying that the US is not a bad idea, and we think people will probably stay overweight US asset, but we think there's room to kind of go lower in terms of this over-allocation to US asset. There's over pocket of growth elsewhere in the world.
And you mentioned tech. Of course, we had the Nvidia earnings as well. Solid outlook. Does that give you confidence that tech as a sector can weather the tariff war?
Yeah. So, I mean, the AI capex story, we've seen the recent earnings story is still intact. It's still quite strong. Now, if you look at positioning, it was in overbought territory when you look at the RSI and whatnot. So it will mean that there's less likely to be overextended price action on the upside just on the tech story. Longer term, still a buy. But shorter term, there's still a lot of uncertainty around tariff, and the positioning is quite overbought. So we'd see less support just immediately for the sector.
Okay. Benedicte Lowe, always good to have you around the desk in the morning. Thanks for doing the early shift with me. Benedicte Lowe, equity and derivative strategist at BNP Paribas Markets 360. Coming up, Nvidia's CEO warns that Chinese AI rivals are becoming more formidable as they fill the void left by the departure of US companies. We'll bring you our interview with Jensen Huang next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get you more now from our interview with the CEO of Nvidia after their results yesterday. Jensen Huang told us that competition from Chinese companies is intensifying. He says that that's adding to the case for Nvidia to be able to offer chips in the Chinese market so that it doesn't fall behind.
The Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips. They don't have to be small. They could be quite large. Without American technology, the availability of Chinese technology will fail the market. And so, whatever we offer has to at least be competitive, and it has to add value to the market.
Jensen, does Huawei have an AI accelerator or a GPU that is performant as H20 or is performant of other classes of GPU that you make?
Huawei's technology, based on our best understanding at the moment, and we have a lot of ground truth there, is probably comparable to an H200. And so they've been moving quite fast, and they've also offered this new system called Cloud Matrix that scales up to even a larger system than our latest generation Grace Blackwell. And so Huawei, as you know, is a formidable technology company, and they're not sitting still, and they look for ways to compete, and they're quite formidable.
With that in mind, you've kind of explained the landscape now, NVIDIA's ability to operate in China. I mean, you and I this year alone have already discussed the idea that there are 50% of the world's AI researchers in or from China. But are you having a sense of the vacuum created that those big names, I think about Tencent or Alibaba or Baidu, that were buyers of H20, that they've already pivoted and turned to the offering from Huawei because of the policy that is in place?
Yeah, they have no choice but to, one of the challenges of the changing regulations is the ability for markets to trust the Nvidia and ultimately American platforms. And so it's prudent, I think, for the Chinese customers to make sure that they develop their stack on Huawei, and because it's hard to rely on American technology at this point. And so that's one of the unfortunate parts of changing policies. But anyhow, I have every confidence that if able to compete, American companies will compete. This is to to write off American technology companies is not smart. This is the home of some of the brightest computer scientists in the world. American companies are incredibly competitive. We just have to have the confidence to go compete. And if we have the confidence to compete, we will win.
Don't write off the US yet, says the Nvidia CEO Jensen Huang, who is speaking to Bloomberg's Ed Ludlow, of course. Now, we bring back Matt Bloxham, our senior tech analyst at Bloomberg Intelligence, for more analysis. Matt, just talk us through what you made of Huang's comments on the AI rivals in China. So you've got the likes of Huawei and DeepSeek.
Exactly, and I think Huawei has been a formidable competitor across many historical tech sectors, and I think there's a lot of parallels here to what happened in the mobile technology market. If you look at the landscape today, Huawei made great inroads into the established markets in the West for people like Nokia and Ericsson, and it's now a kind of 30-40% market share player globally, and Ericsson's similar, and Nokia's kind of lagged. So it had a real impact on those companies. I mean, if I was running Nvidia, I would just assume the world exists excluding China, because I think the geopolitical issues are not going to go away anytime soon. So they may persist for decades. And I think what you have to do as Nvidia is learn the mistakes of Ericsson and Nokia and dominate the world outside of China, so to get yourself really ingrained in every other country. So that would be really difficult when Huawei eventually comes in, because they will come in with their technology, that most companies, most data center operators look and say, this is too complex to unwind this. We're going to stick with the US ecosystem.
Well, that's really interesting, because what did we learn about how Nvidia is planning to expand outside of China? We heard a lot about the Middle East on Trump's visit to the region. Can that region compensate for what's lost in China?
I think on its own, no, but every other region together, yes. Like markets like India, for example, and obviously Jensen mentioned on the call that he's coming to do a road trip of the big European markets. And
welcome to stop in here.
Exactly, yeah. And that would be great to have him on the show. And, I think we're probably going to see other similar announcements to what we heard about the Middle East in major European markets in the coming week when he does that tour. But it's the rest of Asia ex-China as well is going to be really important. So they need to kind of continue to focus on that too. But I think there are big announcements, and think clearly in the near term, it's an open goal for them in all of these regions because Huawei is just kind of really at an earlier stage in terms of commercializing its product outside of China.
So it's playing catch up. But of course we know that Nvidia created the less powerful H20 chip. They were talking about it so that it could keep shipping to China.
Yep.
Now sales of that are going to be limited too. What did we learn about what the answer is going to be from Nvidia?
At this point, they don't have an answer, and they're looking at some alternative technologies that they may be able to kind of create a new answer for. But as we just heard from Jensen there, the Huawei technology is H200, not H20. So it's already well ahead of what they were selling into the Chinese market, and probably what they're going to come up with is going to be even less capable than H20. So probably most companies like Tencent, Alibaba say, no, thank you, we're going to stick with this homegrown technology that's way superior to what you can offer.
OK. Matt Bloxham, senior tech analyst for Bloomberg Intelligence. We thank you. Now, staying with tech, Elon Musk says that his time as a formal advisor to President Trump is ending, and his departure raises questions about the future of the Department of Government Efficiency, DOGE, that, of course, he spearheaded. Charlie Wells is with me now to break it down. Charlie, this has kind of had a drumbeat up to it. What do we know about Musk's departure from Washington?
Well, as you said, this feels a lot like a fizzling out. So there had been so much excitement within the Trump world about Elon Musk, about his fundraising, about his ability to kind of slash through a lot of the government spending. And as a temporary government official, he faced a May 30 deadline. That was subject to some kind of accounting for how much time he actually spent working. But, government officials, White House officials have told Bloomberg that this is an amicable parting of ways. It's something that Musk wanted to do. It's something that Trump supports. But there have been signs over the past few weeks of a fraying of that relationship. So you have seen Donald Trump talk about Elon Musk a lot less on his own Truth Social network. You have seen Musk criticize, just in recent days, the Trump tax bill that's currently working its way through Congress, talking about how he's disappointed in the fact that it would raise the deficit, which is something that is, anathema to what Musk wanted to do. And you could even look at a turning point, maybe to kind of early April, where we saw that Musk candidate in a key Wisconsin judicial race not winning, a candidate that he backed. And so that could have been something of a turning point where the Trump world sort of saw maybe Musk's electoral prowess not quite as sharp as they had hoped. And then there's just the work of Doge itself, right? We've seen this trending down of their goals for government spending cuts from $2 trillion to $1 trillion to $0.15 trillion.
Yeah, so you wonder where those goals are left if Musk is departing. But you talked about what government officials make of all this. What do investors make of Musk's time in government?
They haven't liked what they've seen. And I think big picture, a lot of investors are saying, look, deficits are potentially going up, tariffs are potentially going up. Meanwhile, the Tesla share price is going down. Tesla sales hit a 3-year low in the first quarter of this year. You have issues about brand value related to Musk's time working with the Trump administration. And you've seen a number of troubles across the Musk business empire where, as big as that failure of the space launch just yesterday, to an X outage over the weekend. So this sense that maybe he needs to spend a lot more time focusing on his businesses. And if you think about Musk's wealth itself, it is very closely tied to Tesla, that share price down. So as an investor himself, he might be thinking he needs to make some changes.
So in thinking about what's next for Musk, I have to ask, how much is this a push because of Trump and how much is a pull because of his businesses?
That's a really interesting way to think about it. And I think it's a mix of both. And we got a message from Musk himself talking about how he's going to be, sleeping on server room floors, trying to really push this idea that he's going to be focusing on his businesses. He wants to make X money a success. He really wants to make X something of an everything app. He's really talked about how he needs to focus a lot more on SpaceX. So I think we're going to see a real shift in messaging away from talking about the government, maybe criticizing the government more, certainly than he has recently, and a huge focus on those businesses.
OK, a brace for the X posts. Bloomberg's Charlie Wells, we thank you for the latest on Elon Musk. Now let's get to some other stories making news this morning. Salesforce has raised its annual forecast for sales, suggesting that its AI agent product is on a path to contribute significant revenue. Leading technology platforms such as Salesforce, Microsoft and ServiceNow are competing to offer AI agents, software that can complete tasks such as customer service without needing direction from a person. On a call with analysts, Salesforce said that AI had reduced some of its hiring needs. Elsewhere, HP shares have slumped in extended trading after the company's profit outlook fell short of estimates. The company also cut its annual earnings forecast, pointing towards a weaker economy and continuing costs from US tariffs on goods from China. And LVMH says that its Chinese customers have been pulling back on spending, a bad sign for the luxury sector. First quarter revenue in the region, including China, fell 11% on an organic basis. That's similar to the drop it reported for all of 2024. The deputy CEO says that Chinese tourists in the last 3 months have been travelling less, and when they do, they're not buying as much. Sources elsewhere tell Bloomberg that NATO wants Germany to contribute as much as 40,000 more troops for the alliance's defence against Russia. This as the group also proposes allowing spending on cybersecurity to count towards a new defence-related spending target. Sources say that the body has started talks on what will be allowed under new targets that it plans to adopt at a June summit. And Germany's top diplomat says he's optimistic that the US will issue new sanctions against Russia if President Vladimir Putin continues to dodge a peace agreement with Ukraine. Trump on Wednesday said that he's holding off on new sanctions to preserve the chance for a deal. Well, those are some of your global headlines this morning. We've got plenty more still coming up on the programme, so do stay with us. This is Bloomberg.
Earnings season is here.
European earnings season in full swing.
They're coming left, right and centre.
It is the earnings season that is dictating the narrative.
Bloomberg is first to break the numbers.
The banking sector, that is the auto sector, HSBC, BBVA, BNP Paribas,
Continental, Ferrari. All of them really delivering.
With the smartest insights.
I think the rebound that we have seen has been surprising.
The results hit another record high.
Continuing coverage on Bloomberg. Context changes everything.
reject regulators and we fired Gary Gensler, and we're going to fire everybody like him. And we know that people like Gary Gensler, the game that they played is that under the pretense of consumer protection, they attacked every single effort to democratize our financial markets, and that is over.
US Vice President J.D. Vance there talking up cryptocurrency and laying into the former SEC chair Gary Gensler. You might ask whether Trump's enthusiasm for crypto is actually hurting the dollar. But, of course, it's a good day for the dollar off the back of that tariff ruling. And I just want to set you up with a couple of terminal charts for the day looking into that tariff ruling. So this one, let's just go back to that pie chart, because it showed really how many, what proportion of the tariffs came from those that have now been struck down, ruled illegal by that trade court, the purple here, and that's the amount collected between October and April. Of course, we've had lots of developments since, but it shows just how much revenue was coming in from that. And there was that op-ed yesterday in The Hill from Peter Navarro, the White House trade counselor, talking about how this big, beautiful bill of Donald Trump's is being misunderstood by the bond vigilantes, because, of course, you get all of that Trump tariff revenue. Well, how are you going to fund the tax cuts now? There's a big question for you. Let's flip over the board to the next chart in terms of the equity reaction, because you can see how equities have been faring throughout all of this tariff news. Flip the board again, and the equity picture for futures this morning extremely optimistic off the back of this tariff ruling. But can it last? The Trump administration announces something, it undoes it, and it seems that the relief is even bigger. But can it last? Cameron Cries on our MLive blog saying you can't have a perpetual motion machine. So if you have all of this uncertainty for businesses, does it mean, in fact, that it's got to come to an end? For now, the optimism continues. Well, they're going to discuss all of this on the opening trade coming up next. Guy Johnson and Kriti Gupta will take you all the way to the market open. But after that, don't forget, we've got an interview with the Bank of England Governor Andrew Bailey. It is exclusive. He's going to be sitting down with Francine Lacroix, and you can check that out going live on your terminal. The opening trade's coming up next. Stay with us. This is Bloomberg.